Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin dropped to $68,500 and Ethereum tumbled to $2,048. President Trump issued a 48-hour ultimatum to Iran on March 22nd, threatening military strikes on Iranian power plants unless the Strait of Hormuz reopens. Iran responded with counter-threats to shut the waterway completely and target regional energy infrastructure. With the deadline expiring this evening, markets are pricing in direct confrontation risk. Bitcoin has fallen 6% over the past week, but is dramatically outperforming traditional markets. The S&P 500 dropped below its 200-day moving average for the first time since May 2025, while the Nasdaq posted similar losses. Gold crashed for 9 consecutive days, erasing over $3 trillion in combined gold and silver value. Oil surged above $100 per barrel before retreating. Goldman Sachs revised its Brent crude forecast to $85 for 2026, citing the Strait of Hormuz disruption as the largest ever supply shock. Despite geopolitical chaos, institutional flows remain positive. Spot Bitcoin ETFs absorbed $95 million in net inflows last week, extending a 4-week positive streak. Coinbase reports rising institutional demand, with crypto markets now in a steady consolidation phase. Analysts note Bitcoin's relative strength comes from earlier deleveraging and sustained long-term holder accumulation. VanEck data shows downside protection premiums hitting all-time highs, signaling extreme caution but not capitulation. The SEC delivered crypto's clearest regulatory win in years. Chair Paul Atkins and the CFTC jointly declared most crypto assets are digital commodities, not securities. Only tokens meeting the Howey test qualify as securities. Payment stablecoins, digital tools, and digital collectibles are exempt. The guidance creates formal pathways for token launches, including a startup exemption allowing projects to raise up to $5 million over 4 years. However, experts warn this remains commission-level interpretation, not statutory law. Congress must pass market structure legislation to lock in these protections permanently. Lawmakers are targeting April for a markup, with stablecoin yield provisions now resolved after a White House compromise. An early Ethereum investor transferred 15,000 ETH worth $31 million to Coinbase after nearly 10 years of inactivity. The wallet accumulated 172,000 ETH in 2016 at around $12 per token, now valued at approximately $356 million. Ethereum is trading near $2,000, down 3.5%, as analysts watch for support at $1,800. Resolv stablecoin crashed 70% after an attacker extracted $25 million in ETH through a compromised private key. The protocol holds $95 million in assets against $173 million in liabilities, creating functional insolvency. Pre-incident holders would recover approximately 93 cents on the dollar if an allow list redemption process proceeds. The collapse will create bad debt in lending markets, particularly morpho pools using USR as collateral. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.